what a warm-up. I don't know, I'm going to be able to live up to all of that, Gary, but I thank you a great deal for bigging us up. We like being bigged up because we're quite small relative to a lot of other financial institutions globally. And our journey into, from a distribution viewpoint, into big continents and nations, particularly the US, which is still owner of half the world's wealth. And for us, only about 20% of our client assets are based in the United States. And Barron's is a great publication and have been a really good friend to us on our journey looking around for media partners and also for their very strong conference support business. And we've been working with Barron's. They have a formidably terrifying women's RIA conference, which is all the strongest intermediary female advisors get together in Miami this year, I think it was, and we sponsor some of that. And these are power women who are running assets for clients that can go into billions. And Barron's are very helpful in arranging venues for us to be able to put our voice forward as a foreigner. And we're an immigrant in the United States. And I think those of you, and I'm sure a lot of you have, if you're British, have gone to work in the US. It's one of the most exciting nations you'll ever encounter. But very quickly from getting off the aeroplane, you open your mouth and you clearly sound like you are foreign, which is kind of them to listen. And it's actually the one place in the world that's incredibly nice if you speak with a British BBC accent that they think you're more educated than they are, which is also incredibly generous. So I've been given 20 minutes to take you through the coffee, and I will try not to linger too long. And I will run you through my journey, what we've been doing in the last 5 years. From a group global point of view, for an asset management business that came out of Scotland. Actually, we have a history that goes back to 1875. It's slightly false because the corporation that is the firm I work for now was founded then. But actually, the real growth of our business started in 1983 when three gentlemen left a law firm in Aberdeen, Scotland, and set up the asset management business, about 50 million of assets under management. And one of them, our chief executive, is still running our business today, and he's built it into this fantastically big, large organization, which is quite a track record. I joined Aberdeen Asset 17 years ago, when we had a modest billion or 2 billion of assets under management, and surprisingly, I have grown with the business since then. It always grew bigger than the territory was to fight over, which has been a nice thing about a growth business. You're not squabbling over turf. And in the adventure of bringing on and bringing others, we've gone incredibly fast, and actually we've still got quite a lot of catching up to do, particularly with what we call brand. Which brings me on to the B word, and the first thing I did when I got made what was then called Group Head of Marketing was to go and speak to the competition, because they often tell you what the smart things are. And my good friend Henrietta Jowett, who was Group Head of Marketing at Schroders, said to me, for heaven's sake, don't use the B word in asset management. And I said, don't use the B word. And I said, what would the B word? I said, don't use the B word brand, because the asset managers, they don't get that. They're going to think you're going to talk about the logo. And she was absolutely right. People say, oh, no, all about the brand, they're in the logo. And he said, use instead the C word, and say, okay, the C word. C word is culture. So it is with some disappointment that I tell you today that 2 weeks ago, the management of Aberdeen Asset Management decided to make me Group Head of Brand. It's almost the revenge of knowing what it is that I shouldn't do. So I'm going to try and turn on the controls to quickly run through some of the slides. The other thing I got told was a friend of mine last Friday said, you're going to go and speak at the International Advertising Association luncheon? I went, yes. And he said, how's your presentation? I said, it's detailed, it's forensic, there are some strategic insights. He said, yes, but is it funny? And of course, yesterday I realized it wasn't at all funny. So either I'm going to have to tell the jokes, or I'm going to flick through the slides when it gets boring or wearisome to try and explain what it is that where we're coming from. But this is us. We're a little logo. We call ourselves Aberdeen. Those in the investment management arena probably call us Aberdeen. But we're actually, the full name is Aberdeen Asset Management. And the catchy title because we're a small fry really, is David Buddy's Goliath. And I was talking to Paul, your president, at lunch today, and I said, how many people work for Ogilvy in the UK? They said, oh, only about 1,800. Well, our entire staff globally is 1,900. So you get the impression that although we are in 26 countries around the world, we say we have a cottage in every country, because that's really where we put the analysts who understand and look at the local companies. We're not that big everywhere, and our biggest office is probably in London, where we have nearly 500 staff, but it's still quite a dispersed business, and we're mainly a B2B business. So I'm afraid I have no exciting FMCG glamour ads to show you today, which is probably a relief, because you can tell me how bad they are, but I can tell you a little bit about how we build a business as a professional services and where we're hoping to go in the future. This is not even an ad actually, the only bit of signage that we put was on the, you can pay, I think it's $60,000 a day to have your banner put on the front of the New York Stock Exchange building. And I think the key thing from a Scottish point of view is that if you're going to do that, make sure you've got a film crew to film it so you can put in all your video footage that you're using for the rest of the year. It's a good way to make sure that the media works harder for you. But there it is. This is a banner that came up 2 years ago for one of our funds that have been running for 25 years, that investing in the Asia Pacific. And we've got it there as a starter point to show that we know how to get our typing right, sort of, even though we may not have got all the branding in the most sophisticated way. I've got a boring introductory slide, and then I've got a bit which I thought would be more interesting about, which was the jokes. And the jokes, I thought, there's nothing better to tell a joke about how to be internationally stupid. And the three things I was going to share with you was one, when I first had to tour to get our identity established a little bit in Japan, on the top left, those who've worked there will understand what I'm about to talk about, is that Japan's sense of colour is so different from our own. But after 2 weeks, you know, pastel begins to make sense in a sort of cosy kitty sort of way. Everything all looks the same, and in that sort of soft pastelized format, you realise how harsh and alien our visible sounds need to be. Jumping on from Japan, and if you're going on a Far Eastern tour, you'll end up flying into Sydney, Australia, and you will meet incredibly important people that are telling you what a great country it is. It's a lucky country. It has stuff underground that Chinese people want to buy. It has, therefore, an economy that works, and they have some enthusiastic people with a funds industry that's compulsory. You have to buy a pension fund. It's called the superannuation funds. You have to buy it if you're a working adult. Wow. I mean, that should be great for asset managers. It is and it isn't, insofar as everybody watches their stock prices of their mutual funds. But you sit there and you go and meet the very important people from the Trade Association who were talking to me about the important issues that we've got to know about. Forgive my bad Australian accent. He said, I want you to understand we're a little bit concerned about this and that and the other in the GFC. And I was asking about the GFC. I naturally assumed it was like the International Advertising Association. It was an acronym for something incredibly important. And he carried on. I said, oh, that's interesting, about some point of issue about regulatory change. And I said, what does the GFC make of that? I said, I don't know what you're talking about, Piers. It's the GFC, you know, the global financial crisis. And I thought, oh dear, we don't call it that. And I don't think even our friends in the US call it that. I thought the GFC, and it was great. And then when he talked more about the GFC, it became so much easier to hear about this. It's a thing in like a Pandora's box. When things go wrong, oh look, oh there's the GFC, and I thought it was rather like the Gruffalo. There's a little monster that would pop out every so often. But oh, hello, there's a slight problem about liquidity, leverage. You know, the banking system's melting down. Yeah, that's all right, the GFC. And I love Australia because it's changed our lexicon. They simplify words a lot. Presentations are called prezos. That's nice. Institutional is called insto. So you've got the insto prezo on the JFC. So I love learning from Australia. We get that one right. And the three other things I quickly was going to talk about, which is our sort of head office in the Americas is in the former capital of the United States, is Philadelphia, which is in Pennsylvania. It should be, as you can see on the upper right section there, look, it is a very exciting looking train. It should be just a lickety-split distance from Washington, D.C. and New York. After all, that eastern seaboard from Boston down to Miami, but it's one of the richest nuggets of wealth in the world, and it's there powered along by this fancy-looking train that they bought from the French. It's a TGV, a train de grande vitesse. Not in America, it isn't. They bought it, but a bit like when they had the Hurricane Sandy issue, the infrastructure behind a lot of public land in America, it's not quite as good as we'd like it to be. So the track it runs on is ancient, and In order to slow the train de grande vitesse, to cover the corners where it should normally tilt like this, to go whizzing round at 200 kilometers an hour, they put metal stanchions to slow it down, so you go rattling down to Philadelphia in what should be a 35-minute journey, whatever, in an hour and 20 minutes, and whatever. And you realize that the land of the free and plenty is not entirely powered by the most dynamic technological advances that we expect it to be, not least in the funds industry, because it might be in the tech industry, don't get confused here, in the West Coast. The funds industry is an ancient industry in America. It's only in 2008 that the industry that I work in really crashed for the first time, and I'll come back to that in a minute. So that was the second insight for cultural, we've got to try and learn. The third one is, which is I know our head of digital will smack me at this point, but I snapped that photograph on the left, is that people still do analog stuff. And when they're traveling, look, he's reading a newspaper, a bit like Barron's. And you read it, and it's made of paper, and it has a sequential order, and you don't have to flick it with your fingers and whatever. It's a paper, it's hard. And this champ's arguing with his girlfriend, and that one's talking and reading an old-fashioned book. Is that these technologies and coexist. So digital and analog, we still haven't figured out which of which we can just say, no, we'll ignore all that from now on, depending on your demographics. So that was one. And then the final insight, nothing more alarming than seeing the company you work for, and I should have spotted this, enter the FTSE 100. Now, the thing about the FTSE 100 is that the PR people of Britain, once you enter it, become your friend. And they write to you. And so agencies and people, and they're very keen to be a friend because now you've arrived. And you think, well, this is really just a marker of on market cap indication. You can drop in, you can drop out. No, 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 no. You've arrived. And not only have you arrived, is that you're with a peer group of brands that you may have just said, well, we don't have to worry about. No, 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 you have to worry about them because you're benchmarked. Is your annual report as attractive as that of HSBC? Are you spending £20 million a year on Heathrow Airport gantries? No, we're not. Our entire global, this is the advertising, our entire global marketing budget is a quarter of that. But you're beginning to have to walk with a whole bunch of people who are also, you get the regulator, who is a nice, interesting group of people who are interested to know, are you following by best practice? And you get a whole wealth of new shareholders, blue-collar pension funds, whatever, taking an interest on your corporate level. So your governance, scrutiny, all this begins to change. And it means that we've had to try and change, particularly in the last year, is to think, well, how are we going to accommodate ourselves for a big, brave new world where we're going to stand up against these rather fantastically well-known brands, and how are we going to work closely with them? And as against that, that's the elephant in the room, is that financial services is not the most popular industry in the last 4 or 5 years. And we may think we're asset managers and we're distant or we're pure and we do different bits. No, no, no. To a lot of people, we're all part of the same beastly racket of things that nearly brought down Western capitalism as recently as only 2 or 3 years ago. And this is a troubling space because the banks have retreated in many ways. They're a vacuum left behind in terms of communications, in terms of trust, and actually asset management groups, particularly if they're quite small by comparison, really don't have the corner office space or the buildings to be able to fill the vacuum as yet that's being left behind by the crisis of faith that's emerged as a result of the financial system going down. On the right, just to show that we do languages as well, we have an ad, which is our French ad, which basically says beaucoup d'institutions financières doivent gérer des intérêts and diversions. Sorry, there we go. Many institutions, financial institutions, have to manage different interests, or whatever it's spelled. Aberdeen, chez Aberdeen, that's nice. We only have one thing that we do, which is manage assets, and it's fantastic. And this is an ad, which the subtext of which is, by the way, guys, we're not a bank. And in 2009, that's why Fund Zero gave us a prize, because they went, that's fantastic, they're not a bank, they deserve a gong. And that's what we got a gong for. I think it was the best ad, but it was certainly the best proposition. Which is like, we're not a bank, you win. And it's left us with difficulties because the banks from most countries around the world, the UK accepted, are our major distributors. So those are the 2 slides with the jokes. So I'm going to be faster through the next one because I don't think I left a lot of other jokes before we get to the end, which you can come back and ask me questions if I'm getting it wrong. But what is Aberdeen Asset Management? Well, we come from the northeast of Scotland. There's a little map of it. Oh, well, actually on the right, I pretend that's our headquarters because it looks like Scottish baronial, it should be. It's not, it's the Ardo House Hotel, but it was built in the mid-Victorian period. And we had a very fine conference held there earlier this year, and I love little pointy turrety bits. It has a very distinctive architecture. It has granite is its popular stone, which is a harsh, unforgiving stone, but it's very good for endurance. And a lot of the qualities of Aberdeen are associated with those of prudence and good husbandry. And these aren't bad brand attributes. Actually, in Aberdeen, Scotland itself, the Glaswegians and the Edinburgh people think Aberdeen's a little bit far out. It's like saying you work for Southend Asset Management. But down here, we're all the same. It's also Scottish, and we're all around. And there we are, a nice Scottish firm with a rather overly declarative London taxi explaining who we are because we're here in London too. So we started in 1873, well, the original company did, and we had a fairly basic thing, lending money to Scottish farmers in Canada. Western capitalism has actually been global for a very long period of time, and actually the Scots, as you know, ran the empire while the English played cricket in the middle of it, because they were running the ports and all the entry points. And there what we had was a very basic business, lending money to Scottish farmers. They had to put a lot of money down if they wanted to buy a house in those days, like perhaps 60% equity. They had to put money down themselves. They didn't have 100% liar's loans, as we got to have in the last bit. And it was a fairly basic business. It was very small. Then in 1983, chief executive and two other partners took it out. It set up one or two funds. It opened an office a little bit later down in the giddy heights in Farringdon in London, and it started to build what is the business that we've become today. And today, 27 or so years later, it's turned into a sort of bigger monster with a lot more legs to it, both in terms of the funds that are being offered, the type of capabilities, the type of distribution, the type of offices we're based in. It's become a lot more complicated. And I think that's been an exciting journey. Over the last 17 years, I've been a part of it, and barely a month would go by when something new was happening. And it was a very acquisitive business. In the last decade alone, there were acquisitions of brand names that were once well known in the City of London. The Deutsche Asset Management was the former Morgan Grenfell, which was a very blue chip name known in the past. Credit Suisse Asset Management, with quite a whole chunk of assets from there. It made us bigger in Europe than we are back in our domestic market in the UK, certainly a lot bigger than we are in Scotland. And it's been an exciting journey, and then latterly Royal Bank of Scotland's asset management business in alternatives joined the fold. This creates all sorts of brand challenges which we're going to try and work on. But it's a fast evolving business that has been running in the last 12 or 15 years particularly speedily. The last 3 years we've been sort of drawing breath, and our chief executive has kindly decided not to acquire a lot of businesses, which has resulted in our share price going double, which is interesting. It's the first time you probably reward people for not doing anything rather than doing anything. And asset management is an odd business because in most years, doing nothing makes you more money than doing something. I mean, if you make chocolate biscuits, you've actually got to sell them, whereas in asset management, unless you've got a down year, whatever it is, most time markets go up 5-6% in some sort of format or another. What an attractive game to be in. It has its complications because it's not always predictable, and that's what causes problems with people. So we communicated mainly because we avoided one big mistake, which is don't be boastful about performance. That's the biggest mugs game in asset management. If you say you're number one, you will know that the following week or the following year, whatever, you're going to be number 2 and number 5 and number 2. If you hang your hat on offering performance, not only will the regulator come around and feel your pocket and send you to jail, you will end up causing yourself all sorts of problems because no one can offer out performance in the future in the way that they have in the past, and past performance is no guide, as we know, to the future. So we concentrate instead on how we do things, and for us, process was very important. We do a lot of due diligence, go and kick the tires, we go and check every company, particularly in equities, before we ever invest in it. And we had a little campaign for a while, which was very successful for barons in the US, with a little red scooter, which is meant to be a sort of iconic symbol of emerging markets. My colleagues in London were very worried. Will they understand it's in New York? Is it too gay? Why does scooter be gay? Do these things transliterate into different languages? And anyhow, it's a very popular scooter. And we auctioned it. We bought it for £1,000 and put it in our reception 3 years ago. One of our competitors had a Formula 1 racing car. Yeah, we're the biggest. We had a scrappy old red scooter. We thought that was far more cool. Impact on a low budget format. And I'm trying to say that the brand complexities have arisen because we now have stakeholders on the FTSE component of our business, which are a different group of people. Opinion formers is perhaps the slightest word from it. We've got our institutional investors who are clients of ours, and we have a quasi-wholesale retail leg of what we do, each of whom have slightly different needs and expectations of what we are as a business. And we don't have the budget capability to disperse ourselves without trying to get some sort of overarching and common identity, and that's really what our struggle has been over where we're getting to now for later on this year. And brands used not to matter hugely, mainly because our our B2B focus is as a component maker, which other people assemble into delivery to end consumers. Sorry, the chart's gone a bit squonky. But we're increasingly having to reassure the end investors of where we come from that we exist, or we stand for something, as Gary was trying to say earlier on, is that who are these people from Aberdeen, and we'd like to have some idea of our persona, and that we're understood. And this is the commercial chart to show, because we have a lot of accountants in Aberdeen Asset Management, is to show that brand actually does offer some value, and if we're able to try to make our awareness go up, we should get more clients. If we can increase our assets under management, we'll make more money. If we're able to be seen as high quality, we can probably charge a bit more for it. And if we keep the asset sticky to us, we've got a chance of keeping that money lasting for longer. And stickiness is a big problem for asset management firms. There are assets where you can bring £1 billion in January and you can lose them all by October. And if you don't keep them and you don't have a way of getting persistency, it's a very, very hard laundromat business of fickle and capricious shareholders and investors. We took some help. Now a friend of mine, Hans Arnold, he's a highly forensic brand specialist, is to be able to look through the 5 dimensions of understanding what brands are all about. And he mapped out a lot of the well-known financial services brands and said, well, where do you sit on the where, what, why, and how, and which is the dominant dimension that exists for Aberdeen Asset Management? It was a very interesting project, and we went away and scrutinized all our evil competitors. They're not evil, they're lovely in their own way. And this is a sort of brand map, where the who, why, what, and where is for people called BlackRock. BlackRock, a relatively recent brand, it bought iShares, it was came out of Blackstone originally. It's the largest global asset management group in the world. It bought a lot of things very successfully and actually ran its first really large, meaty campaign to enter into the space, which I was talking about the vacuum that the banks had left behind. And BlackRock has done a campaign recently, you never love it or hate it, but understand that they're trying to invade the space that's been left behind by all those banks that got into trouble and having to be repaired. And they basically say, we have a global platform, and they're doing pretty well at that. And so their dimension of brand that's most significant is the where. We're global, and that's what we are. Our other competitors, another listed, London Stock Exchange listed firm, it's very much more well established in certain ways. Schroders is a lot more blue blood than Aberdeen Asset Management, and so they will tell you that. So their positioning is about who they are. I think we summarised their pitch as we're classy. Well, actually, we're upper class. And then they are looking a little bit more around the culture of what it is that they're offering through their a series of campaigns that are very easy to mock other people's ads, so I won't be rude about their statues campaign. And we did that around ourselves, and we had a lot of discussions about what type of firm Aberdeen Asset Management is. And we sort of asked our clients and we asked our executive what they felt that we were, and then broadly we think there's a slight stereotypical differentiation between us and your average lofty ivory tower city firm that's stiff, and Aberdeen's virtues, if any, are about being approachable and accessible. And it's probably coming from Scotland. It's not too caught up in the caste structure system of the UK, but it's fairly grounded and down to earth. And we thought that's an important differentiator. We should look at really our culture as a way of expressing what we are and be very open about it. These are a list of lessons which was done by our Asian office to try to tell their investors things to watch out for when you're making investments in their area. And we like it as a tone. You could see these perhaps in a sort of economist style. Well, actually, we would be too timid to say China has been a casino on a poster ad in Shanghai, because we might get asked to leave. But in the main, the emphasis behind this one is to say, can you make what we're trying to do realistic and basic and understandable and simple? And the good thing about trying to hang our hat on a cultural positioning around simplicity is that actually it's an understandable proposition. It hits across the different audience groups that we've got to worry about, and it slightly explains an investment method better than just hanging our views on process. I'm going to jump around because actually we haven't concluded this exciting journey, but if we're now moving into culture as to what we think we're doing, it's going to lead to far more interesting communication strategies, which we're working on at the moment, and maybe we'll do more next year. In the meantime, we are this low-budget organisation without the massive amount the banks have got. You know, there is our friends at BlackRock spend $80 million a year on advertising alone. Right, I'm explaining that our entire marketing budget is about 5 or 6, and so we're really working from a lower platform, and we're not as deep as they are. So we can try and do things to get stand out. We've become a recent sponsor of Cows Week, which is an interesting activation. It allows our salespeople as well as the people who are involved in the sailing in the summer to be able to get together. We run like almost an airport of activation for clients and others to get involved in the sailing activity. And in the United States, we're big supporters. You may have seen that Gary and a few of my other colleagues are wearing a lapel pin. Lapel pin is an important advertising medium in the United States. I don't know, those of you who travel to New York will often meet people with an American flag. They have to do that to remind themselves where they come from. We're less insecure. I'm wearing one called the Tudor Rose, which is for something that we got involved with, which is the Queen Elizabeth II Garden in Lower Manhattan. It's a memorial garden for the Commonwealth victims of 9/11. Everyone tends to think that the 9/11 disaster was only affecting US citizens. It affected us all. It affected all the nations, and we're very proud of this tiny plot of land. It's a third of an acre, and we're constantly fundraising for it, because if you don't pay for your garden to be maintained, Mayor Bloomberg may get a truck and just run it over and just turn it into a sidewalk. If you've got tax dollars to get rid of before the end of December, any US people here, you may want to give it to the Queen Elizabeth II Garden. That's the end of the promotion for our activity on the garden side. And we try to do fun things. On your table, we've left you our latest CD album we've done in conjunction with our friends at Jazz FM. This is a very interesting internet global jazz radio station. Jazz is cheaper than pop. You've noticed that. People often do it because they love it. And we've got involved with Jazz FM for our third year running to be able to, we sponsor a radio show. It's between 3 and 5 on Sundays. You can listen to it anywhere. 3 and 5 GMT. It's called the Aberdeen Discovery Show. It's hosted by Helen Mayhew, who's a great DJ, and introduces great tracks that you should have had time listening to. We're going to be playing this on British Airways long-haul flights from January. Our intermediated clients, private bankers, like, they travel a lot. They go to London to go and check portfolios. They travel and fly around the world, so we sponsor that. This is the garden I mentioned. Up the top here on the right, we're particularly proud of that. That blobby thing over there is not a badly cooked piece of bread. That's a Braemar stone to you English types. You see, Braemar stone is what you do when you toss it at the Highland gatherings. It's an incredibly important part of the Scottish sporting scene, and it sits there in Lower Manhattan now with the number of miles it is between New York and Aberdeen. And there's Her Majesty being shown around by Mayor Bloomberg to open the garden a couple of years ago, and a nice little device. I don't know why I mentioned these. I think at the end of the day is that if you don't have a lot of budget, do something that's different and try and be interesting and to try and be engaging and try and be loved for it. And I think lovability is very important in sponsorship. And this is a great ley line for a lot of British and Commonwealth visitors to the US now. So I've got to the end of my rather bad run through about how it is to go international in a hurry. And we haven't finished our journey. We're not an established brand in many ways, we're still a challenger. And I think there's quite a lot that we're learning to try and get better at. But we're now finding that culture is the basis on how we should try to differentiate ourselves in a marketplace which is dangerously close to being commoditized because we're all claiming the same thing. And I think if we can get a bit of persona around what we do, that will give us more legs and more longevity and more assets to keep. I also think that we have more media choice than we ever had before, and I think we do a lot of activation now digitally to our intermediated communities. And so what I was going to leave you with is a 3-minute film which explains, we won a prize for this. It's called a fun talk, not a prize for the film, but it's a prize for the service, which is how we reach, particularly in the US, the 150,000 advisor community who are meeting end investors to talk to them about the products and services that we offer. So I'm going to try to get it to work, which is going to be fun. But it's a 3-minute short film, and after that, any questions?
Good morning, good afternoon, and good evening.
Hi, everyone, and thank you for attending today's webinar on how network automation can reduce costs.
My name is Mary think the communication channels is going to change radically. It's very different to the old way of either just having a website with information that people can come and look at, or just sending out a document for somebody to look at. They want more than that nowadays. They want to understand the people behind it, what drives those people. Are they the types of people that they want to engage with?
In the U.S., it's a very serious time right now in terms of a lot of the policy challenges that the country faces. Remember that this election really does have big consequences for both the American economy and for the world economy.
India has a very dynamic business population and has tremendous potential as far as infrastructure is concerned. The issue, as ever, is whether that potential will be realized.
Tell us about the US economy and politics.
The deepest problem with the US economy is the level of uncertainty. People don't know which way the US government is going to go.
Hi, this is Neil, and here's a quick update on the fund.
We're looking to do a number of strategic partnerships.